So Merck recently reported their earnings this past Thursday, and although they posted higher profits, they said that the tariffs cost them roughly $200 million. Now, before we get into analysis, let's actually look at the actual news. So Merck on Thursday said its first quarter adjusted profits rose 7% as lower costs helped offset a 2% decline in sales, reflecting a January decision to pause shipments of its Gardasil vaccine to China due to a downturn in demand. Now, the drug maker said it earned $5.61 billion in the first quarter, or $2.22 a share, excluding one-time items. Worldwide sales dipped 2% to $15.5 billion, exceeding the average analyst forecast of $15.3 billion. For 2025, Merck said it still expects sales of $64.1 billion to $65.6 billion, but it lowered its adjusted earnings per share forecast to between $8.82 and $8.97. Merck said the outlook includes a $200 million impact of tariffs implemented to date by the U.S. government on imports from other countries, plus the cost of tariffs imposed by foreign governments on the U.S., particularly those related to China. All right, so this is the monthly chart. And before we look at this weekly buy setup, we want to look at current price. Go down and to the left. And although this is not the ideal rally based on candles and rally, it still has that formation of a rally based rally. So what I'm going to do is denote the zone at about here, because you did get this extended range candle, 2 in a row to be precise, out of this zone here. Again, not an ideal price structure, but nevertheless, we're going to say that is monthly sellers at $80. All right, let's get down to the weekly chart. First, let's look at this weekly buy level that worked out once. Now, I thought the setup was going to be price was going to come back to the zone and then move higher. However, this collapse was in sync with the overall equity markets collapse, where we saw the indices go into correction and bear market price patterns and declines. All right, so I'm going to take this off. I'm actually going to move it here. As you do have a weekly sell level, at that 110 level. And here's an example of one that worked out very well. And that level is still fresh, meaning, well, not fresh. Price did return. But as you can see, price penetrated the zone less than 50%. So this area is still valid for potential short. All right, so now within this monthly sell level, the meat and potatoes of the zone is going to be this rally based on candles and the rally out. So if you wanted to reduce your exposure and not take this whole zone, you go to a smaller time frame, which will reduce your exposure, increasing your rewards to risk ratio. Let's go down to the daily chart. All right, so the chart shows the makings of a triple bottom. 1, 2, and then 3. Really, we would love to see price get above this level, $83. You do have a little daily sell level. So that becomes your first target if you are in long. I just want to zoom into the 4-hour chart. So here's what I would anticipate happening. Get a pullback, pick up any remaining unfilled buy orders, and then the move higher. Again, look for the $91 to serve as a first target. Medium-term target going into the second half of the year. Look for price to get to this weekly or the daily, this weekly sell level. This is the daily chart. But I would target the 200-day moving average as a target. Thanks for watching. Subscribe. Please like the video.